Hi, Dhiraj.
Hi, Karuna. How are you?
Good, how are you?
Thank you.
Excellent. Thank you for coming to the podcast today. For every audience that is listening to us, I'm Karuna Malik. I run my own practice by the name of Forward Accounting. And today I have invited Dhiraj Arora, who runs his own financial planning firm. We are going to talk about, for the sake of our audiences, that how financial planning is something which is very critical and how can it help every Australian if they financial plan and how can it generate wealth for you over the period of time. What we are going to do now, we are going to start this interview where Dheeraj is going to take you through this journey where he's going to explain what are the benefits of having a financial planner along with your accountant on your side and how it can help you long term. Thank you, Dheeraj, for joining in. We are going to start, and I'm going to ask you to give a bit of an introduction for yourself. How long have you been in this profession, and a little bit about your own self?
Thank you, Karuna, for inviting me. My name is Dhiraj Arora, and I've been running as a financial planner since 2009. Previously, I was with one of the big bank where I was helping a lot of bank customers to achieve their financial goals and helping them to build wealth. And since 2019, I set up my own practice and I've been running massively along all throughout Australia where I help Australians to build their wealth and protect their wealth. As a financial advisor, we give holistic advice and we work with obviously accountants to make sure all boxes are ticked and all areas are being looked after when it comes to overall wealth creation. We give advice in a number of areas like superannuation planning, investment planning, estate planning, tax planning, management plan. We help people with retirement needs. They wanted to maximize their Centrelink. We look into all aspects from a holistic planning point of view. We look into end-to-end process to see where they can build their wealth and how they can fill the gaps if they have any.
Yeah.
And it's very comprehensive process we have to follow to understand their overall needs and goals.
According to you, what are the biggest financial blind spots you see in everyday Australians? What are they missing out on?
I will say there are a number of them. Let's discuss one by one. So one of the biggest blind spot I see is underestimating their retirement needs. When I say retirement needs, superannuation plays a bigger part. Now, superannuation is very complex. Not many people understand because there are so many rules around it. So many Australians don't even know what their rules are, which super fund they have. Sometimes they have multiple super funds. They don't even know which investments they are in, whether they are in the right investment mix, which will help them long term. And missing out of number of things like personal contribution is one of them. They can add a bit more money, save tax,
Yes.
save money for themselves. This is one area where a lot of people just don't pay attention. They say, I'll think about when I retire.
Yeah.
But we
Whereas
believe
it ideally should start pretty soon because
that's
everyone is going to retire and it's good to plan ahead of time, isn't it?
That's correct. If they start earlier, they can have much more better outcome when it
Yeah.
comes to planning for retirement. The other area which I've seen is they are over relying on properties because everyone loves properties in Australia.
Yeah.
And they just say, we want to go in property investments, and they just don't diversify their money. They take so much loans and debts and they think they will be rich by buying properties. They put all their eggs in one basket. That's one thing. They don't look into other things. There are a
Yeah.
lot more other options
Absolutely.
available. Budget planning, which came recently since the inflation has gone up, everyone is struggling with their cash flows. So I've seen people not planning well when it comes to budget. That's one area where they don't pay much attention. Other area, I will say ignoring tax planning, which is a big thing because we
Yeah.
have a lot of tax to pay.
Correct. And I think this
Uh,
is where the accountants work collaboratively with financial planners because accountants kind of help the client's tax plan as well.
Most definitely. That's where one area where people wants to save tax,
Yeah.
but they don't take advice. They
Yeah.
said, oh, some miracle will happen. They go on Google and think about it, but it's not one fit solution for everyone. So
Absolutely agreed. Yeah.
you need to have some plan for tax as well to see how legally you can save some tax
Yeah.
by looking into different strategies. Other thing which is pretty common is lack of risk management plan. I've seen people don't have backup plans like personal insurances. They ignore their estate planning needs, like they don't make any wills or any power of attorneys. And all these can make someone vulnerable or their family in difficult situation if
Absolutely.
anything happens.
Yes, I
So
think the point you are trying to make here is that it's not about just earning the money, it's about planning for your retirement, planning for wealth creation, which will happen when you think about from that perspective that in long term, when you retire, what sort of lifestyle you want to live, how much money would you need when you retire. And this is where financial planner, a person like you, can come in and you will do that holistic review for a client.
that's 100%. You're on the spot on the concept. So it's the
Excellent.
planning is not about I'm gonna have a magic wand and I can make you millionaire tonight.
Yeah.
It's about planning from now based on your situation, your cash flow, your goals and objectives. Work on a plan on what strategies will suit you, where it will help you long way to improve your overall situation.
Absolutely, absolutely. Now, I think one thing that I have observed with my clients as well, everybody can make money and people are making money, but it's their financial habits that drive what sort of wealth they'll end up creating because sometimes the clients don't even have good financial habits. In your experience, what is that one financial habit you have seen in your clients which help them create wealth and you would encourage our audience to follow that?
When it comes to building financial, I'll say wealth or overall wealth. So there are a number of things will takes part of it. The first one is discipline and bit more knowledge about what I need to do. And again, it comes down to the planning.
Yeah.
So if someone educates you that yes, number one, you need to have good budget to see what your ins and outs are, what's your cash flow looks like, and how much extra you have every month. Most of the people get excited and spend that money. They don't save it for their future. We generally say around 10 to 20% of your savings should go towards for your future planning. If you save, let's say, $10,000 a month, I'm just picking up a number,
Yeah.
then at least 10% or 20% of that you should put away either for yourself and invest that somewhere. Starting early will always give you much better outcome long term when it comes to having much more wealth at the time you retire or after a certain time frame, because different people have different goals. I think budget and then start getting into habit to start investing money somewhere. And there are lots of investment options available in the market. Some people want to test by themselves and they burn themselves because they don't know what they're doing. Now, these
Mhm.
days, a lot of people say, oh, crypto is the way to go. And they end up buying some cryptocurrency and it doesn't go that way. They lose that money. And then once they have bad experience, then they try to stay away from investing. Before you jump into investment, talk to a specialist so that they can guide you
Yes.
what's out there. And based on your risks, you can invest money.
And
Starting,
that leads me to my next question. You know how you said that consult a financial advisor like you. A lot of people don't even approach accountants for tax planning because they think, oh, I don't know how much fees I am going to be up for. If we just have to give a rough figure, I know that every client is different and every client's needs are different. But if we need to encourage our audience to think of financial planning, if you do the holistic review of a client and you set them on the right path, how much are they looking to pay?
I encourage customers to have a meeting. First meeting is at no obligations. We'll do the review and we educate them whether they are already going on the right track. There may be some adjustments they have to do, or they may be going right opposite direction at all. We'll
Yeah.
say, sit down and have a chat, and we'll give them options, ideas on what they can do. There may be some areas where I'll say you need to talk to another specialist like accountant or a lawyer for other things. And there may be some area where I can assist. Now, in Australia, by law, if you want advice, we need to give advice in writing. We can't give verbal advice. Now,
Mhm.
to give advice in writing, we have to spend 20 to 30 hours to prepare a financial plan, which
Mhm.
includes number of strategies, depending on what we are tackling with. Now, for that, there is cost involved.
Yeah.
Generally, depending on what we are doing, it can be around $700 to 5,000, depending on what we are doing. That's a
Yeah.
broader range. If
That
there
at
is
least
more
gives them the
work,
idea.
yeah.
Yes.
If there is much more work involved, then obviously there is more fees because we spend like hours and hours planning and preparing all those documents. But as I said, it's best you sit down and then we can work out, okay, which area we can add value. If
Mhm.
I can't add value, I won't charge fee. I said there's no way I can charge fee because it's not worth it.
Absolutely.
But at least you get educated now and then you come back when the time is right for you.
Now, what is one thing that you have seen in your firm and where you think that one thing that you wished accountants would have known better so that they can help their clients to come to the financial planning sooner than later? What's that one thing that you think every accountant should know?
Again, I will not say about you, but it's most generally, most of the accountant thinks this is all numbers and investments and all that. If accountant just have a bit of change of mindset, just don't think financial planning is numbers. It's all about clients' lives, goals, emotions, objectives, their overall situation. So when someone comes to us, we just don't look into only numbers. We look into what's their family situation, what's their goals, where
Yeah.
they want to be. We look into a broader picture so that we can hold their hand long term. If you think that way, then the accountant will be able to refer more clients for financial advice.
Absolutely. And I would like to mention this point that for even from accountants serving their client, this is like a value add for any client to kind
Mhm.
of help them holistically to make sure that your client is going to succeed financially, whether they are a wage earner, whether they are running a business. And
Mhm.
as you rightly said before as well, in Australia, accountants are not supposed to give any financial advice. So it's something that is not their zone. It's best that if they work with a financial planner so that they can kind of look after their client in its completion form, where the client is also able to achieve what they want to achieve in a long term or a short term.
That's for sure. You need to work as in collaboration because we know we can complement each other. That will say,
Absolutely.
do this, but you need to make sure check with your accountant based on XYZ if it works, and then it works. It become much more effective.
Absolutely agreed. Now, I would like to highlight this point to all the audience who are watching, as Dheeraj has mentioned. Don't hold off in seeing a financial planner, whether it is Dheeraj or any other financial planner. The cost that you are going to pay is worth the effort of making sure that your money is being invested the right way, because there's no point losing all the money that you have to save the cost of a financial advisor, because that cost is very minimal as compared to the wealth that you might end up generating with the right advice that you are going to source. And same thing even for tax planning. When you sit with your accountant and when you sit with me, the cost that you are going to pay, it's obviously is tax deductible. And this is something you are going to benefit from when you seek that advice. Now let's
I
move
agree.
on. I would like
Mhm.
to kind of ask you, you mentioned about super, that when we started the conversation, you said people make a lot of mistakes, the average Australians with their super. What are the most common mistakes that you see people are making with their super?
With super, as I said, super is very complex. So there are lots of rules around it, like how much you can add to it. I will say let's start with the common mistakes. What I have seen people just stay with their default fund. Someone joined a job and employer offered a fund. They said, okay, let's go with it. They thought there is no other choice.
Yeah.
Now that fund may be charging a lot higher fees. They may be charging a lot of insurance premiums. They are poor performing fund or average performing fund, and people don't make effort to think outside the box to see is there anything better out there. That's one of the common mistake. People stay in their default fund,
Mhm.
and sometimes they jump from one employer to another and they start opening multiple super funds and they pay multiple fees and charges. which can save thousands and thousands of dollars long term if they consolidate into one.
Yeah.
And common theme I've seen is, oh, I have super, I don't know where it is, who's with, they don't even know their balances. If you don't pay attention, super is the one which is going to help you in retirement phase. You need to clean up and make sure you have the right fund, you're invested in right investment solution, and you have the maximum you can get out of your super in the form of savings and tax savings and adding some extra money so that you can have much more better outcome long term. So that's one or two, with multiple super funds, and you need to check whether you are in the right investment strategy as well, because some super funds offer very poorly managed investment solution. People go online and see, oh, this fund has performed better, they go with that fund, but they don't see how that money is being invested. And they have done it now really good, but next year they may not do good. So depending on the asset allocation, how they're choosing the investment, that's also very important to look into. But most of the option, just people don't even pay attention.
It would be fair to say, just to conclude that point for our audience, that if you are changing roles, make sure you don't go for the default super that is being offered by your employer. That is what Dheeraj is trying to say. Try to stick with one super fund that you have and just make sure you understand the asset allocations as well before you kind of keep going with that super fund.
That's correct. And choose the one which suits your need and investment solutions. There is one I have noticed: when market crash, people get worried and they sell the investments at lower point. That's one of the biggest mistake they do. Market always goes up and down, and long term it tends to grow. So if you sell your investments when the market is down, you're making the loss permanent. And that's where the education comes. The planner will guide you that just don't do anything now. Wait, probably this is the time to buy more investments.
Yes.
And just controlling your emotion is very important. And other thing is, people don't pay attention who the beneficiary should be in their super fund.
Yeah.
And generally they go online and nominate their spouse or kids and things like that. And just remember that online nomination is not valid. It's just your wish, but it's not binding by the super fund.
Okay.
So I've
Do you
seen a lot of
recommend the clients to do a binding nomination then?
binding nomination.
Ex-
And again, who will money will go to, because there can be tax consequences, and that's why you need to sit down and seek advice.
That's a fair point. I know that this is something that everyone should note, that whatever you put in online, I think by memory, it's only valid for 1 year. But you put online, and until it's not a binding nomination is something that is there. If anything to go wrong with someone, that binding nomination will kick in, isn't it?
The binding nomination is it's like a legal nomination you're doing. The trustees of the super funds bound to your wishes. If you
Yeah.
don't do a binding, you do online one, someone can ask and claim it, and it can lead to dispute. It's better to do that binding. There's a form comes, you have to fill and follow the process. There are misunderstanding of some tax rules. People end up adding more and they end up paying a lot of taxes. You need to consider that.
Yeah.
That's another mistake. And these days, a lot of people get influenced by social media, because there are a lot of people selling properties and say, buy, open an SMSM and buy property. And they don't understand the complexity around it, and they end up doing big mistakes.
Yeah.
And it can cost them a lot more.
And then there's an SMSF compliance they still have to do, irrespective whether they've bought the property or not. The SMSF is now in place.
So just remember, SMSF is not for everyone. Before you jump into it, take some advice, talk to an accountant, talk to a financial planner to see whether it's for you or not.
Excellent. Now we'll move on to this massive topic that's going around, that is the difference between a female and male super balances in Australia. And the government is coming up with new policy, but let's talk about the scenario as of right now. What
Mhm.
do you think are the challenges that women face today uniquely, and how can financial planning help a woman overcome these challenges?
That's a really good question. Women and men, they are but different. And when it comes to corporate life or there's no pay parity. There is some gap between
Mhm.
their income. On an average, I think I was reading an article around 11 to 12% women are paid less as compared to men. So if they get paid less, their super contributions will be less. So
Absolutely.
long term, it's gonna have a huge impact on the super balance when a woman retire as compared to men retires.
Yes.
And then women tend to take more career breaks because they raise the family and then they reduce their hours or they don't work for some time. And that can also have an impact on your long-term retirement savings because they're not saving enough. And I've seen most of the women are a bit more conservative when it
Yep.
comes to finances because they sometimes they don't understand the complexities around it, and sometimes they don't want to take risks. Like most of the time, women are not aggressive investors. These challenges or these issues can be fixed if they sit down with an advisor and have built their more confidence about investment so that they
Yeah.
can understand, even though from inside I am this, but the right thing to do may be XYZ different strategies. If
Yes.
they sit down and work out, there can be hiccups coming throughout their financial journeys, what they can do from now onwards. So they can plan in advance to fill those gaps in future so that they can retire at the same or higher balance than the men.
Yes.
For them, the planning is very, very important. And
Yeah.
most of the time, women just neglect it.
And I think I would add to that point that there is some sort of this resistance that I see even with my female clients, that they don't want to take charge and they think that it's the responsibility maybe of the man of the house
Yeah.
to manage everything. I think having an insight into how your finances are going as a family is also very critical. If a woman understands what are my ins and outs of my home budget, that will give them a bit of an understanding that what's going on and how are they tracking. And I think one thing I've also noticed is that a lot of females don't even go into their super accounts to even check what is the balance of a super account. Like if I have to ask what's your super balance, they would have to first figure out what is the login details to even see what's my
So,
super balance.
yeah.
Having that awareness and having that input into the family as well to manage the cash flow, that can kind of help a woman pretty well. And I think the financial planner can definitely set them up to make better investments so that they can also retire with a handsome balance.
And that's the reality. We need to build their confidence. I get clients, husband come for the meeting and they said, "Oh, leave the wife out of it. I'll manage everything."
Yeah,
I'll insist that bring her so that we are doing gonna have an impact on her as well.
absolutely.
So
Yes,
even though she is not doing anything at the moment, she need to understand what's going on, and it builds the confidence.
absolutely.
And I think we need to educate more women, give them confidence so that they can be part of this journey as well.
Yes, couldn't agree more. Absolutely, Dheeraj. Absolutely.
Mhm.
What are you think the long-term principles that matter more than all this market noise? People listen, oh, BTC is falling today. I think I need to withdraw my money, or the market, as you said, is crashing, and people will start calling you saying, "Oh, what I heard is happening with my investments. It's all falling down." What are those long-term principles that you would like people to remember instead of just listening to the news?
I'll go back to basics. When it comes to investing money, you need to understand you don't put all your eggs in one basket. Diversify the money. Don't put everything in property and property market collapse. I don't know whether if you see New Zealand, there is a big market, bubble that was busted, and the property values are very lower than people borrowed money, I will say 4 5 years ago. So can it happen here? Absolutely, it can happen anywhere because
Yeah.
government policy change, things can happen. So if you put a lot more into one asset class, you're risking it. So that's why there is old term, don't put all your eggs in one basket. So diversification is the key. And you need to understand time in the market is important than timing. So if market crash today, just don't panic. Stay invested as long as the investments is put in place in line with your goals and objectives. There will be short-term volatility. It may go away. You should review it, but just don't panic so
Yeah.
that you get assurance from an advisor that this is only short-term or you may need to change your strategy a little bit, but just don't panic. and always invest in line with your goals and objectives. It's not like my friend is investing in Bitcoin, I should do that as well. So
Yeah,
just well, there is no one fit solution for everyone.
absolutely.
You,
Yeah.
your friend may have high tolerance to risk and you don't have that much. Your goals may be different. You have a lot of debts. So we need to see whether investment is right for you or not to start with. And have a discipline and education around how investments are, how they work, just the basic. I don't want you to learn, which share to buy, but
Yeah.
you need to understand how market behaves.
Yeah.
So I will say if you stick to these, you don't need to know anything else. You just stick to your plan and just don't panic and have a disciplined approach, an informed approach, and then you will be okay. And just remember, no one can make more money than the market. If someone says, I can give you 20% return, just remember, higher the risk, higher the return. So there may
Absolutely.
be something fishy. You
Yes.
may be going into very high aggressive investment. You can lose everything as well.
Absolutely. There's no quick rich schemes, that are existent there. That is a red flag in its own right. That if there is something like this, then, one needs to be very careful about it. Yes. Now, I think what I would like the viewers to kind of do a takeaway, what are the things, what are the golden nuggets that you can leave the listeners with today? That what are those three things that they can do as of now that can help them improve their finances? But before you go into that, I would still like to make a disclaimer to all our audiences. Although Dheeraj is a financial planner, and I am an accountant, we are not giving you still any financial advice. This is a very generic conversation because your scenario can be different. So please don't rely on any of this information. You can get in touch with Dheeraj or myself if that is something you want to explore further. But our information in this podcast is very generic, is to help you, but every circumstance is different. So please make sure you act on this very carefully, and we are not providing any advice. So let's move on, Dheeraj. Any three tips that you can give to our listeners?
So as I said, for every client, there may be different strategies that they want to look into. But in general, I will say everyone should have a budget to see, okay, how much my ins and outs are, how much we are earning, how much we are spending. If there is any gap, what can I do with that money? So have a really good budget, and that gives you a bit more confidence. And then should start a saving plan as early as possible. So you need to have some buffer and you need to have some emergency funds. You need to start investing
Mhm.
so that it can have a compounding or snowball effect long term, and you build your portfolio or savings outside super as well. Because reality is some people are not retiring at the moment. They are young and they have 20, 30 years to retire. You can't touch your super, so at least you have some backup plans somewhere. Okay.
Absolutely.
And third one is have a robust plan to maximize your retirement savings with embedded with a risk management plan, that if anything goes wrong, what sort of backup you have. And at the same time, you're building your wealth through either through retirement fund or outside super. Now, in risk management plan, we also think about how I'm going to reduce my debts as well.
Hmm.
So that's also part of it. So I can broadly say these are the three things if everyone can do, they won't go wrong.
Excellent. That is so good.
Mhm.
So, thank you so much, Dheeraj, for sharing all this information. Now, to the viewers, I am going to leave the link of Dheeraj's email in the podcast in the description, and you can get in touch with Dheeraj if you wish to, and he will be happy to assist you. And if you are looking for an accountant who can also help you holistically to grow, I'm going to leave my details as well in the description. Feel free to get in touch, leave us your comments in the video section. If you have any comments or queries, we'll do our best to come back to you. And if there are any questions for Dheeraj, leave them there, and I will try my best that I can answer those questions after I've spoken to Dheeraj. Thank you so much for joining us, Dheeraj, today. And hopefully, we'll do another podcast together and we can educate, our women audiences as well a lot better on how they can manage their finances.
Thank you, Karuna, for inviting
Excellent.
me.
Thank you. Thank you
Thank
so
you.
much. and I'll see you next time.
Thank you. Bye
Bye
bye.
bye.